Hey guys. So, because this week is a very tricky situation, I decided to make a video because it's a lot to explain and a lot of back and forth. And yeah, like I said, a tricky situation, and we need to look at evidence from both sides. What I think will happen, generally speaking, is we drop to 390 or slightly below. Basically, this line, uh, something like this, which should be consistent with the 100 MA. This is kind of the low we can see. Let's put it a bit higher, or this. Yeah, something like this. So 388, 87 at max, and then we probably go up. But have to talk about why. So first of all, what happened this week is we kind of uh, we dropped below the 100 MA. We had an attempt to go back up on Thursday, and then PCE came and we had another drop, but it's still like a controlled demolition. We're not seeing anything crazy like the start of a big drop. We need to have this kind of candles like the one here, minus 2% and then continuation, or this one minus 3%. All of the big drops have started with huge candles, like this one was small from a day-to-day perspective, but it was huge from a top to bottom perspective. I think it was, let's see, minus 287, yeah, something like this. This one was also huge, and it was the beginning of a large drop. And we're not seeing this here. It's a controlled demolition, and until we see something similar to the start of a big drop, like this one was 272, something along of 2.5% or higher, this is not a big drop, like or it won't cause a flush down, make us retest the lows. We need to see that kind of drop. For now, it's just it's just a pullback, and pullbacks generate bounces. They don't make new lows. What is encouraging is we closed below the 50. We went as low as the 200 and then bounced up. We're pushing the Bollinger Tooth band lower, and I like I said, I think we stop here unless we get a big red dildo that takes us lower. We lost the hour side trend line, back tested it even and went a bit lower. But let's look at all the crazy trend lines here. The thing is, maybe this isn't a trend line. Like it is a trend line, but maybe it's not a big one. Maybe instead of this one here, maybe we have something like this. This is an aberration. Like this could mean nothing. It's a full candle, but whatever. But it could have as easily been a week down. And when we have this kind of huge deviations from the previous trend, it's okay to ignore them. And maybe we haven't really lost the uptrend. Let's hide this. Maybe we haven't really lost the uptrend right now. This was the one, and we closed below it. But maybe it wasn't a good one. It's relevant, but maybe it only implies that we dropped to this one, we retested, and then we bounce higher as well. So this is a real possibility, and because we didn't have a signal candle that starts a big drop, most likely it won't get past this one either. So yes, we're between them, kind of the same situations as being between the 200 and the 50 MAs, but it's weakness, but it's not breakdown weakness until we get a big confirmation candle. And given how we've already dropped quite a bit, like we're compared to where this started, we're down, I think 5%. Let's see, where was it? This one. So from the top, we are down 5.9, and since the drop started, we are down 4.9. This is a completely reasonable pullback. It doesn't mean that much yet. And even if we go below the 100, and like, if we would test this new version of the trend line, it will still be within reasonable bullish a reasonable bullish setup. So let's put the trend lines back up. And this, you remember when I drew this previously, and I need to hide a couple of these because we don't care for them today. 400 we leave on. This ones we don't care about. And we don't care about the moving averages for now. Yeah, this is much cleaner. And we don't care about RSI because we saw what it does already. So you remember this $20 approximately ranges that we move from one to the other. Um, we overshot this one, but it was an overshot, so it doesn't really matter that much. It happened in the past as well. Once you get above 410, the next range top is around 430. And when you break down below 410, the next major support line is 390-ish. I have it drawn at 389.37, but again, these small overshoots don't mean a lot. The point is that once we break above these levels, we tend to go to the next target. So if 390 doesn't hold, we go to 370. If 370 doesn't hold, we go to 350 and so on. And just on the way up, it's the same. So like we went here, we rejected, we went back to the lows, we went back up, went back to the lows, went back up, and only when we went above it and made it the support, it went to 410. This one even broke 410, it went to 430. But you see how it was resistant multiple times. Even here with the small overshoot, we can say it was resistance. And what are we doing now? We're going back to 410, for 390, sorry. If 390 doesn't hold, and but that's a big if, we're going to 370. If 370 doesn't hold, we're going to 350. But most likely 390 is going to hold. And let's look at the delta profiles, and this is one of the other reasons why I think it will hold. So I did this in three parts. First is the OI profile for next week. This is what it looks like. So this is not delta. This is just the OI. There are no calls lower than where we are. We are at, what was the close on Friday? It was 396.36. So we're just above 395. There are no calls below this. Like we're running out of fuel on the move down. And on top of this, 390 is the biggest OI level for puts. So because of this, it will naturally be resistance. Like market makers want stability. They want big, large movements because it forces them to dynamically hedge a lot. And they would prefer for that not to happen. From a market maker's perspective, uh, who is a option seller, they sell both calls and puts. Their ideal scenario in any situation is for price to do nothing. Because if price does nothing and they have sold both puts and calls, they make money. Uh, in an ideal scenario, no price movements at all. They keep selling puts and calls. They collect the premium and they have nothing to worry about. And they don't have any to pay anything for dynamically hedging like commissions and stuff. So 390 will be a huge resistance level from an OI perspective. And when we look at delta for this, very, very little call delta to burn as well. Uh, and a lot of put delta to burn if you go back up. So a move down will be resisted. A move up will have a lot of fuel because all of this will be rehedged. All of this will be unhedged. So if we move up, there's going to be a lot of push to burn. Moving forward, this is for the week of the 10th. So we have 3 weeks from OPEX. It's going to be on the 17th. So the third, that was what we watched until now. Then is the 10th, and then the 17th. This is the other week. of the 10th, and it's the same situation. Yes, there are more calls, yes, there are more puts, but generally speaking, the profile is almost identical. And 390 is still a huge delta level, and it's gonna be a difficult or OI level, and it's gonna be difficult to break through it. On the delta side, same situation. We have a ton of in the money put delta. Maybe we go to 390 to test it, but this will almost certainly be rejected. And then we have OPEX itself. On OPEX itself, we still have 390 as the biggest put level. We still have a lot of calls. We have a lot of calls here that can be rehedged if we have a push up, and the delta looks kind of similar. So I don't think we will get through 390 easily, but we can overshoot it for certain. This is the delta profile. So another thing to note here, think as now we have a lot of in the money put delta. With each expiration that we get through, like each daily expiration, we lose a bit of momentum. Ideally, you get a build-up of momentum as price moves lower, but because we have an expiration each day, we lose a bit of momentum as time passes. So if we get to Friday, let's say, and we're not below 390, I expect a huge rebound going into March. Most likely, March is going to be a big rally that might get to 430. So, assuming next week we bounce off 390, uh, is going to be something like this period here. Let's like this. Like we go to 390, we go up and down around here for next week, and then at the beginning of March it's gonna be just this. Too high, but whatever. At least for 10, but most likely we retest this trend line, and it was gonna be what's uh, for until the end of March. If you remember from a previous post a couple of weeks ago, or at the end of the year, we have this pattern of continuing moves that start on OPEX into the quarter end. So this was one. It started on December OPEX and it went on until the end of the quarter. Then we have March. It started at on March 14 and it went until the end of the quarter. So once a move starts in the quarter end month, it will not end on OPEX. Most likely it will end at quarter end. We have this one in June. It went up for a counterparts because we were super oversold, but we still went down until again until quarter end, and then the move started in July, not in June. We didn't retest the lows. Same here, September. September. This was September OPEX. The move down didn't end as September OPEX. It continued until month end. We even got a retest in October, but generally speaking, you get the idea. So when the quarterly move doesn't end at OPEX, it ends at the end of the month. December, we had this was OPEX, and we started the move, and it didn't end, or we didn't reverse until the end until December. We stayed near the lows. So this is kind of what I expect this week. Like I said, we go down to 390, maybe overshoot a bit, and then we chop around here for a week, and then we start going up and do that. If we lose 390 and we have that big red dildo candle similar to the ones that started big drops, uh, we will go to 370, but I doubt we'll get that. The drop has been too controlled. Like the biggest drop was, what do I have? 128 minus 2 minus 1. And this was even a green candle, like we closed higher than we opened. Uh, but given the delta profiles, given the moving average situation, I think we could definitely get another retest of the 200 MA. And we have the 100 MA, which is 394.48. I think we go a bit lower, retest the bull market trend line. This is the bull market trend line. I think we tag it again, maybe even overshoot it a bit, but not by a lot. Then wick back up, close at 390, and then then the situation is just of a consolidation. Uh, Bears will probably try to push it below 390 again, but I doubt they succeed. And then just the exhaustion of the move down will cause a bounce. The bounce, price going higher makes price going higher. People will start following in. They will again say we made the higher low, and we will have made the higher low, and the whole momentum shifts. People will start following back in. We get another squeeze and so on, and probably go until the end of March would be something like this. Let's put a horizontal thing. So March 31st, go lower, too much. Go lower next week, end the week back on the 200 and on the daily, chop, whatever, go back up, something like this, and then big drop again. Yeah, so that's kind of it. I can have other cases for it as well, like the 10-year is at the top of its range. Even if it goes up higher, it's starting to show fatigue. RSI is making a bearish divergence. We have a lower high in RSI, and this was almost a higher close. Not quite, but there. Not quite there, but if it goes higher, again, it's gonna get stopped out. And probably is gonna try to break out, but get rejected eventually. DXY hit its first target. Next one is it should have a pullback, but wouldn't be surprised that if it goes higher as well directly. Regardless, once it reaches this zone, it's probably gonna stop. What else do we have? We have EU equities breaking down, but again, maybe this trend line isn't good enough. Maybe it hasn't happened yet, and we can still chop. Even if they break down, it doesn't mean that we go down a lot. Like even a drop from, this is DAX, so we drop from here, let's say to here, it's just another 4%. Maybe it actually retests this low here and it's just another 1.8%. So we can just go to the lows on Monday and that's gonna be it. And it's not that big of a drop either. So we are here, we just drop another 2%, maybe over 2 days or over a single day, probably over a single day, and that doesn't mean we close here, but the extent of the candle can be as low as this. So 2% and then we bounce, and 2% is nothing. Like we can do it in a day or over 2 days. VIX is getting rejected again. Might get a bit crazy if we push down like that. Maybe it goes to 25, but that's kind of it. VVIX has been controlled as well. I don't really see it. What could cause it to be a bit scarier is just on a continued pullback. So VIX would go, it's at 2168. So let's say Monday we have a bounce. Sorry, it goes back to 20, which is the horizontal support here. Lower. Sorry, this. So it goes here, 1994, and then back up, and then that does that move above 25. This could also happen like this for the market. Like we continue up, we back test 400, and from 400 the drop is going to be a lot scarier to get that big VIX pop. That's going to be like 3.2%. That's pretty big. So if on Monday we continue going up, and then we can have that big red day that is actually scary. That's actually more in line with maybe 390 not holding instead of holding. But 390 is the key here. If we hold and if next week closes between 390 and 400, probably this is gonna happen in March. If next week we close below 390, then 370 buy around here. Same situation. probably more faster on a move down than on a move up. Yeah, that's kind of it. So hope that makes sense. Good luck.